All right, so we're talking about the futures in the red over in Europe as well. Some of that pressure from some of the issues in the Chinese property sector. Do you expect that to continue to spill over into the U.S. and concern investors here?
Yeah, listen, we're in the home stretch of August, and, you open the show with all of these, potential items that will affect the market, and we're really anticipating more volatility today. And so I do expect that to continue with the ultimate, impact, the ultimate thing impacting the markets being the Fed, right? But, I think it's really important to note that September is traditionally the worst performing month of the year. For the past 22 years, it's been that way. 12 of those months, September's been negative. So now is a good time as we kind of head into thinking about next week to look at your portfolio, see where you need to rebalance, and kind of prepare yourself for potential opportunities in September.
All right, so you're saying potential opportunities coming up in just a few weeks, but what about right now? I mean, we're seeing some big mega cap stocks taking quite a dip over the last week or so. Would you buy the dip on these companies right now, or do you think there's more downside pain?
It really depends on the company. So again, when the market's down, it's usually a good time to buy your high conviction names. So it really depends on the company. We don't want to kind of paint our buy strategy with one broad brush. I always, when I'm on the show, kind of talk about our formula at Pivotal in terms of like how we buy stocks. It's really about quality. It's about strong balance sheets, and it really is about competitive moats. So, I think investors should really think about what their buy strategy is and kind of identify individual high conviction names.
All right. So with that all in mind, Tiffany, what's your WEX word of the day?
Cautiously optimistic. That's two words, I know. But again, we're experiencing some volatility right now. I expect that to continue, and including, potentially into September. But the good news is, for the rest of the year, the fourth quarter is traditionally the highest performing quarter. But again, really pay attention to those names that you have a lot of confidence in, and buy those on the dip.
All right. So cautiously, number one, you're sneaking in a phrase. A lot of people have been sneaking in phrases lately.
I am.
So with that in mind, you're cautiously optimistic, but give us a sense of some of the plays that you would actually make today, even with that optimism and that caution in mind. You gave us a list of some of them. I want to start with one of them, an AI play, HubSpot. Why are you so bullish on this name? It seems like one of the names that might be deeply impacted by these rising rates. It's also had a huge run up year to date.
Yeah, I mean, it's up over 75% year to date. And again, just a bit of a reminder, at our firm, our clients are institutions, so we are managing money for foundations and endowments, and it's actually over multiple lifetimes, right? So in perpetuity. So we're less of traders and more of long-term investors. And so we look at a company like HubSpot. Yes, definitely, it's done extremely well this year, but when we think about their kind of competitive moat and their business model, there's this growing need for CRM systems, right, at a reasonable price, contrasted to like a Salesforce, which is a bit more expensive. HubSpot offers a little bit more and really kind of caters to like that smaller market. And that's really where things are going right now. It's definitely more user-friendly. They actually have really low market share, which we believe kind of sets them up for significant potential for runway growth.
You're also hitting one of our themes, retail. So you have a pick in the retail space. Lululemon, why would you buy this stock today? It's also had a pretty strong run-up year to date. And in general, kind of considered a more higher-end luxury brand when it comes to sports apparel, when we're seeing that the consumer is a bit stretched.
Yeah, and so you actually bring up a good point. The consumer is a bit stretched. And remember, this year, that excess COVID savings is going to run out. And also, student loan repayment is going to come back. But Lulu has really carved themselves a really nice spot in the market. They have this cult following, right? So for consumers of Lulu is no longer a nice to have, it's a must to have, right? Those Align pants that they have, that I have on actually right now, are amazing. And they really kind of like they are excellent at listening to their customers and meeting their customers' needs. So not Lulu necessarily just today, but in perpetuity, right? So this is a company that we really like long term. And if it does take a dip today or even Monday, kind of going into next week, I think it's a good opportunity to buy.